Okay, so now we're actually getting started. We want to get started into analysis. So I'll try to provide you an introduction into technical analysis. Now, just generally, who are technical analysts and what is technical analysis? Technical analysis essentially involves how you can look at the chart and know whether or not a particular instrument or a particular asset is set to rise or is set to fall. It's an interesting skill to have, uh, and your ability to be able to do this will be what will position you really for getting the pips, getting the right amount of pips, and of course that will go into actually being profitable. So we're going to basically just begin to look at an introduction to technical analysis. Now, there are some fundamental principles that you need to understand when you're going to be a technical analyst. And the first one is that these are the principles that support technical analysis. The first is market moves in trends. So the market moves in trends. And so this fundamental belief, this fundamental understanding is very critical for traders. The next is a very interesting belief because this belief is essential that you understand all information is reflected in the price. This is because there's quite a lot of different factors, principles, ideas that occur per each moment when a person is trading. It's important to be able to mentally harmonize all of that information and have that understanding. And that's really what technical analysis, the foundations of technical analysis tries to help you understand that no matter what's going on, no matter who's speaking, no matter what news is coming out, no matter what everyone is doing, all of that information, however divergent as that information is, whether it's Donald Trump saying something, or is the chair of the Federal Reserve somewhere saying something, or is something happening in Saudi Arabia with the oil, whatever it is that's going on, all of that information filters into the price. So price is the ultimate thing that technical analysts look at, and the behavior of price is what gives them information about what is going to happen in the future. Now, the third principle is history tends to repeat itself. Now, this is very important. This is why we begin to know that the when price gets to a particular level, because of what's happened in the past, because of how the traders trading in that particular period have reacted to price at that point, then we can get a sense of what's most likely to happen. So this is important because the markets, okay, markets are a function of crowds. Okay, market reacts just the same way you have crowds react. That sort of herd mentality, and it's important to know that because when we markets have memory, uh, because markets have memory, there's the remembrance of whether a price came down at a certain particular point in time or it went up. The markets have that sort of a memory, and that makes history to repeat itself. Okay, these are foundational principles of technical analysis. All right, so one of key places to get started with in analyzing and doing technical analysis is understanding what a candlestick represents. Understanding what a candlestick represents. So I will before I get into that, I want to show you what a candlestick actually looks like on an actual chart. So when you launch your chart, it's not unusual for you to see it look like this. Okay, um and just clear that out. So you kind of see the charts looking like this now, but when you come up here to where the zoom button is and you zoom in, you'd realize that when you zoom very deep inside, you kind of have this entire chart sort of broken down into this sort of bars and with wicks. These are known as candlesticks. So it's important usually for you to understand what these candlesticks represent and what information that you get to find out with the candlesticks. So as you probably noticed, uh, we had two colors on my chart for candlesticks. There are two colors, and one of the things you notice is um, that these sort of bars actually vary in length. You'd also notice that this varies in length. Now, what is the meaning of this representation? A candlestick simply represents the behavior of price within a particular block of time. So each candlestick actually represents a predefined block of time. So using the time frame feature, you can change which particular how much time this block of candlestick represents. As an example, you can make it 30 minutes, and what that will mean is the chart will now recalibrate to ensuring that each particular candlestick it represents 30 minutes of the movement of the price of that particular asset. You can trade it, you can change it to 1 day, you can change it to 4 hours. That's actually the function of the candlestick representation. That's actually the function of the time frames. The time frames change the candlestick into blocks, the behavior of price within specific blocks of time. If you look at my current chart right now, my time frame is on the H1. Now, what this means is that every single block of time is actually represents 1 hour movement of price. 1 hour movement of price. So if you look at it, for instance, this actually if you look at the date, the corresponding date, for instance, this is 2020-10-09. Okay, this is, and look at the time. This obviously this is 2200. When you move to the next candlestick, you notice it's 2100. When you move to the next candlestick, it's 2000, on and on like that. Now, this is because I set it at H1. If I actually set it at D1, for instance, it's going to recalibrate the charts and now change it to represent 1 day movement of price. So as an example, if I set it to D1, for instance, this, if you look down here, you would see that this is 2010-09. But when you move, it changes the entire date. Okay, to the next candlestick is now 2010-08. All right. So what you now find is that when you zoom out, okay, one of the importance of what this is that when you use lower time frame candlesticks, they sort of show you a chart that's closer to what's going on now. But when you use a higher time frame candlestick, that is, you increase it to the daily or the likes, it actually sort of zooms out and shows you the bigger picture of the price. So I'm going to go into a better explanation of how this functions and how this can be helpful in helping you to understand, analyze better. But let us look at what each one individual candlestick. So let us take this particular candlestick as an example. We notice that it's different from in color from the other one. What exactly does this candlestick, or in fact any candlestick, what can any candlestick tell you? The first thing that you got to notice is that the color difference, the color change tells you what's happened within that particular time frame. So I'll give you an example. This particular candlestick here shows you what happened this is set on the daily as an example. So it means that this candlestick represents the movement of price on this particular day, and that day is the 23rd of September 2020. Now, because of the color representation, I can automatically already know that this candlestick means that price fell in that day. Price actually came down. Now, the opposite is true for this candlestick as an example. This candlestick tells me that on the 29th of September, price rose. So the interesting thing that candlesticks will do, as opposed to just having a chart that doesn't have candlesticks that sort of connects all the prices, the candlestick will break down the price into specific section of time And in that section of time, it will tell you that, oh, listen, this during this particular section of time, price actually fell. So when the color separation, okay, is not fixed. There's actually customization abilities, customization features that can allow you to customize what these colors actually mean. But the thing to note there is that the difference in color, you just can't look at it visually and say, oh, I can see clearly that whenever price is coming down, it means red. Whenever it's going up, it means green. And you can obviously customize that. You can open up a chart that's got different color representations from this, but it will still mean the same thing. Beyond that, as an example, each one candlestick tells you some more information. Now, like I mentioned, the color combination of price actually represents it actually represents the behavior of price during that time frame. Now, something interesting you would notice here is that um, you've got high, close, open, and low. What exactly does this mean? Now, when you trace the price of these four key levels, they will correspond to these meanings. What do I mean? Now, if you go to the top of this candlestick, this price will actually represent the highest point price got to before the highest point price got to during that particular time frame. So if this represented a day, for instance, what that would mean is that the high price will be the highest point price got to during that day. Now, the low price as well would mean the lowest point price got to during that day. So if you had price sort of move up and move down, kind of like that during that particular day, the low would capture the lowest point price got to and the high will capture. Now, what about the open and the close? Now, the open price represents the price at which, assuming that this is a daily candlestick, because it's very important for you to segment based on what type of candlestick it is. If this is a daily candlestick, it will mean that the open price will be the price at the beginning of that day, while the close price will be the price at the end of that day. So you've got the highest point, the highest price during the day, the lowest price during the day, the open price at the start of the day, and the close price at the start of the at the end of the day. Now, this is also true for whatever other time frame that you're looking at. For instance, if this representation represented price in 4 hours as an example, this would mean that when at the beginning of that particular 4-hour interval, the open will represent the open will represent the price at the beginning of the 4-hour interval, while the close will represent the price at the end of that 4-hour interval, and the low would represent the lowest point within that entire interval of price, and the high would represent the highest point within that interval. Why do we have two different candlesticks of different colors? Now, it is important to note that on one of the candlesticks, okay, what makes the color different is that price actually rose, okay. In this my example, for instance, price rose during that particular time frame. That is, the close price was higher than the open price, and that's why you have this color of a candlestick representing price on the go up. Now, the other color is formed because the price opened higher and closed lower. That's why so in other words, in the entire session, price actually fell from the time at which that price actually from the beginning of that particular session, whether that's daily or hours, or it doesn't really matter. So that's how you have the close price. So, and of course, but this stays the same. This still represents the highest point price got to, and this represents the lowest point price got to. The notation in terms of the names that we ascribe to this candlestick, when price rises, irrespective of the color, we call it the bullish candlestick. When price falls, irrespective of the color, we call it the bearish candlestick, representing that price actually fell. So still here on my time frame, this represents a bullish candlestick, another bullish candlestick, on and on and on like that. Now this represents a bearish candlestick because price fell, and these are bullish candlesticks. Rather very simple. Now one of the things you notice is important during understanding that when you change your time frame, the candlestick reorganizes itself because it now represents something, a different section of time. But if you're very observant, one of the things you find when you're analyzing is that I'll give you an example. If I were to segment a section of my chart, for instance, and actually begin to analyze from this point, from the point at which this candlestick was up, I will realize that we have 3 daily candlesticks here. 1, 2, 3 daily candlesticks here. But if I switched it to the 4 hours, still from that same point in time to the current point where price is, we now had a lot more candlesticks broken down into 4 hours. So per each of the days, as an example, you're going to have you have 6 4 hours candlesticks present in one day, because 6 multiplied by 4 is what's going to give you 24 hours. So you have 6 4-hour candlesticks present in a day. So you notice when you switch time frames, it kind of acts as though you're zooming in and you're zooming out. And this is very important because it helps you properly analyze. So a very simple, to sum it all up, if you wanted to know what the highest point price got to, say on the 6th of October 2020, okay, all you have to do, that's on this particular candlestick, all you have to do is to come use the crosshairs feature here. The crosshairs feature is here. You just pick it up, and then you sort of go touch it, ensure it touches it, and watch what the price is saying on this side. So this is telling me that on that particular day, the highest point price got to was a price of AUD USD, that is this particular asset, AUD USD. The highest point it got to was 0.72081, and the lowest point price got to was 0.70994. And coincidentally, the entry point is sort of like the body of the rectangle here. The entry point, I kind of know that this is the entry because of the color. It's a bearish candlestick, and the open price is usually the one on top. So you can go here and check, and you see the entry price was 0.7176, and the price at the end of the day was actually the same thing as the close price on this particular day. But if you were another candlestick, for instance, you see that the close price might differ from the low price. The low price and the close price here on this particular candlestick are the same. So, but this just in summary helps you to understand the meaning of the candlestick and the information that's there. So when next you see a candlestick, you should readily understand that it actually just means breaking down price movement into specific time frames, and you have the choice to determine what particular time frame that's going to be.